Many people are talking about FIRE movement nowadays. By the way, FIRE here means financial independence, retire early. But I have seen many people who are part of FIRE movement does not want to retire early. They just want to have financial independence so that they can do what they love or explore what they love. Everyone have their own reasons. If you are watching this video, you must be having your own. I want to be financial independent so that I can do what I want and when I want, no strings attached. Hi guys, I'm Ankit from Master Investment, where we seek to be better investors than before. In this video, I will walk you through what is FIRE movement, most common way to achieve financial independence, and how to calculate your FIRE number. Let's start with what is FIRE movement. FIRE movement is to free yourself from the cycle of work to earn. FIRE movement is to create an income source for which you don't have to work actively. In other words, a source of passive income. There are different ways one can achieve financial independence or be free from the requirement of having an 8 to 5 job to earn money. Most common way to achieve financial independence is by investing enough money in stocks and bonds so that even if you withdraw a fixed amount every month, your investment can sustain itself forever. Now comes two questions in mind. First, how much money should I have invested? Second, how much can I withdraw every year? Let us answer the second question first. To answer this question, I will refer to the research paper published by 3 finance professors of Trinity University. The research paper is called Trinity Study, or most of us know it by the 4% rule. The 4% here refers to the portion of the portfolio that one can withdraw every year, while still having some unspent assets in the portfolio by the end of 30 years. Before I go into the details, it's important to understand the assumptions professors made while coming up with the 4% rule. So the assumptions they made are, one will withdraw 4% of the portfolio's value in the first year every year. Portion withdrawn in the subsequent years will increase with increase in the cost of living or inflation. It is possible that the withdrawals may exceed the income earned by the portfolio. The portfolio value may reduce during periods when stock market performs poorly. And last assumption is that the portfolio should last at least 30 years. Based on these assumptions, the authors backtested a number of stock bond mixes and different withdrawal rates against the market data from 1925 to 1995. After studying the results of their tests, professors came to a conclusion which I quote, "If history is any guide for the future, then withdrawal rates of 3% and 4% are extremely unlikely to exhaust any portfolio of stocks and bonds." This is how the 4% rule came into picture, and many of the FIRE movement enthusiasts take this rule as the basis for calculating their FIRE number or the minimum amount they need to invest in stocks and bonds. Now we know how much we can withdraw. Let's check how much we need to invest or our FIRE number. Most simple way to calculate the FIRE number is to follow these 3 steps. Know your monthly or annual expenses. Divide your annual expenses by your annual withdrawal rate, which is 3% or 4%. The result that you will get is your FIRE number. Simple, isn't it? So, if your average monthly expenses are $3,000 or euros, simply multiply them by 12 to get your yearly expenses. Then divide that number, which is 36,000 in this example, by 3% or 4%, which gives you your FIRE number, which is in this case 1.2 million or $900,000 or euros or any currency that you are interested in. This is a very basic way to calculate your FIRE number. There are many sophisticated calculators that consider various factors like inflation, income from other sources, etc. while calculating the FIRE number. However, I think if you are new to the FIRE movement, simply divide your annual expenses by 0.03 to get your FIRE number. One big assumption that is made while calculating the FIRE number is that the portfolio will be invested for the whole time and it gives an annual return of at least 6% every year. You can use different calculators to check your FIRE number based on your annual expenses and the return on investment you think you can get. If the return on investment is more, you can reach your FIRE number faster. Similarly, you can use the annual expenses you think you will incur after retirement instead of using your current expenses. Why I say so is, this will help you to calculate your FIRE number more accurately, because your annual expenses after retirement may be less or more than your current expenses based on your plans after retirement or once you are free of 8 to 5 job. This is one of the simplest way to achieve financial independence, but not the only way. Remember, the goal is to earn a sum we think would be enough to cover our expenses after retirement without actively working for it. So one can earn that amount by other ways also, like getting rent from their properties or income from their businesses or any other passive income source. There's a huge community of people helping each other to achieve financial independence. I would highly recommend you to join these FIRE communities or read the journey of the people who have achieved financial independence and how they achieved it. Here is the list of 9 best FIRE blogs you should read and the list of calculators you can use to calculate your FIRE number. If you like the video, then help this channel to grow by liking this video. Also, your feedback matters a lot to me, so let me know in the comments what you liked and didn't like about this video.